We're talking about Rio Tinto. Of course, Rio Tinto produces iron ore, and iron ore has been in the spotlight as of late, especially with this week's price agreement between Chinese steel mills and Australia's Fortescue Metals. Direct investment in the commodity is limited, but as Paul Gordon shows, there are other options.
Investors can't buy iron ore futures the way they buy oil or gold. Still, iron ore is mined, shipped, and almost all of it is used to make steel. At each stage, investors might be able to make money. First, the mining. The world's three biggest iron ore suppliers are BHP Billiton, Rio Tinto and Valedoria Doce. Their shares have mostly rocketed this year. The average analyst target prices, though, suggest upside is now limited to just a few % over the next 12 months. Chinese bulk shippers have also mostly soared this year as the government's stimulus plan has supported demand. Japanese carriers have fared far worse. That may be because they have more exposure to container shipping, which has collapsed along with exports. Bulk shippers still face two main problems: weak demand outside China and possibly in future inside it, and oversupply of vessels. The Baltic Dry Index of freight rates fell 92% last year, and this year's recovery has faltered in the last month. Analysts see China COSCO as overvalued. The average 12-month forecast is for a 22% drop in its shares. Analysts are looking for low double-digit gains for Japanese carriers. One closely watched bulk shipping trade among retail investors in the US is dry ships, whose stock has almost halved this year, and it may not be ready to turn up just yet.
They've refinanced and basically restructured the balance sheet of the company over the course of this year by issuing equity. And so I think investors are still a bit gun-shy, plus they're fully valued against what they're going to earn for next year.
Meanwhile, cheaper iron ore cuts costs for steelmakers. That's been cancelled out, though, by lack of pricing power, and their shares have mostly lagged the miners. Analysts forecast gains of up to 13% for the biggest stocks. Paul Gordon, Bloomberg News, Hong Kong.